What is up, guys? Hello and good morning. It's your boy Vajalarazzi here, or Mr. DIY Investing. I'm getting back into the how-to series. Today we are going to be learning emotional psychology of the market and market cycles. This is one of my absolute favorite parts of trading, and I'm so excited to bring you this video today. So without further ado, let's get into this. Okay guys, how to trading market cycles. This is something I really enjoyed when I first got into trading. It's something that a lot of these new guys getting into crypto catch on fairly quickly. You can talk about a market cycle and just show the basic human emotions and how it's tied together with financial markets, and people just seem to really understand it a little bit better. So I'm happy and I'm super excited to bring this to you guys. What is a market cycle? A market cycle is a wave of human emotion that cycles and repeats over time. Market cycles are formed off of a few key emotions we all feel: optimism, thrill, euphoria, fear, anxiety, panic, depression are the main emotions of the market cycle. Why are market cycles important? Market cycles are the psychology of investing and trading. They form in every tradable market. Understanding cycles puts the trader / investor on top of their emotions, which is just so accurate, guys. I loved market cycles because once I learned about them, I could go apply them to any market I found. Whether it was a commodity, whether it was a stock, futures, it didn't matter. I could go find these little cycles and see how they repeated over time. Not only that, but when I first started learning about this, I was a very, very emotional trader. I always let my emotions get in the way of my trading experience, and because of that, I was always left vulnerable to the market. If you trade with your emotions, you're gonna get wrecked 9 times out of 10. And it's just super hard to get over that. Once I learned about the emotional psychology of the market and market cycles, I was able to target those emotions that I was feeling and kind of push them away and stick to my trading plan down the road. And here's an example of a market cycle. For you guys that do not know what this is the Wall Street cheat sheet. That's a tongue twister there. The Wall Street cheat sheet. And this is the human emotions, or the basic human emotions that you will feel, or the average person will feel trading inside of a financial market. Now, this is kind of the way it goes. And if you pay attention to this, and if you've seen crypto charts before, you'll notice that a lot of these charts behave very, very similarly to this graph right here. Basically, you have disbelief, hope. Once the rally picks up, you go into optimism. Belief, time to get fully invested. They start to add to their positions once the coin's pumping. Thrill, this is where they've added to their positions and all of their trades start to go up in profit. And then you have euphoria. This is where they're adding margins, they're getting over leveraged, they're just so happy, they're seeing all these massive profits being made, and then we crash. And then we get complacent. And then right here, they're just expecting another wave up, but that wave never happens, and then they get stuck bag holding as they lose all of their profits. Keep in mind, they were adding margins up here. So right here, they've wiped out all their profits, and now here they're starting to take losses. Anxiety, denial, panic, capitulation. Capitulation is where they dump all of their coins and they've had enough. They've made these huge losses. They don't expect the market to ever rebound again, and so they take those massive losses. Then it goes lower. Anger. Who shorted the market? Why did the government allow this to happen? This is freaking awesome because I see this all over crypto Twitter. I don't see it as much anymore because the market's slowed down, but at the very peak of this bear market, there was people complaining about manipulation everywhere. There was all these little Twitter accounts that blew up because of the fact all they talked about was how manipulated the markets were, and it's just so funny to watch. Everybody's so sad when they lose money, and I can understand that. I've been there. And then depression, when everything is just dead. That's kind of what we're seeing right now in Bitcoin. This is how the emotions play into your trading and the market cycle, and it'll create this little pattern every single time. So I'm going to transition screens and we're going to dive right into this so I can show you guys some examples of what these market cycles look like in real time. So let's get right into this. Okay guys, so to start off this, we're going to take a look at the most obvious market cycle that I've ever seen in my entire life, and that is the great almighty Bitcoin. Now, I got into Bitcoin right about here at the very base of this little market cycle that played out, but we're going to go through here and show you exactly what I talk about when I say a market cycle. So as you guys can remember, we had that emotional market cycle graph, and this is the same pattern that plays out repeatedly over and over and over, and all of the human emotions felt in this are going to be repeated. So the best way to see a market cycle is you have this big round that kind of happens, and you can even see one that happened right here. It's less of a round, but you can see the overall picture. You have a massive rally in price, and then you have a massive retrace once the bubble pops, and then you kind of go into this little accumulation phase, and all of the emotions are the same. And once you can see this little pattern play out, it's going to make your trading so much easier and a lot more methodical, because you can kind of plan the cycles accordingly. Now, whenever you're buying a market cycle, you want a couple key factors to come into play. One, you want it to be at basically support of the last cycle. So in this one, the support of the last cycle would have put us here. That's where you want to be buying, is basically the base of the last, or the previous all-time high of the last move. Now, as you can see, Bitcoin just so happened to play along to that accordingly. Keep in mind, not all of the market cycles are going to behave the same. A lot of the times they get messed up a little bit because of Bitcoin's volatility, especially if you're trading on a Bitcoin chart. But the rules stay the same. You want to be buying near all-time highs of the last move, or at least close to. Sometimes in a really bull market, they won't retrace that far down, but that's what you generally want to be targeting. Not only that, but there's another key rule that you need to pay attention to, and you want to see max seller capitulation volume. So this one is a prime example of how somebody could have easily got faked out here. You had this big bottom happen, and then you had this sharp little pump, and then you had this massive sell volume come in here, bigger than we've ever seen in the previous cycles throughout Bitcoin. Now, the only reason why I wouldn't have bought this is because this is happening at a pump into resistance with this sell volume. What you want to see at capitulation of the market, and the key point to buy a market cycle, is you want to have a strong retrace, and while prices are skyrocketing down and you're having a strong sell-off, you want to see that same sort of bear volume come in when the market is going down in a bear market. Okay, in a bear market, this one was pumping, and then we saw this max sell volume. Now, that just means we're slamming into resistance, which usually indicates we're going to go lower. However, even if you bought here, this big of a move is nothing in the overall scheme of things. Like, look what happened to Bitcoin after. This move does not matter. Now, this gets into another key point that I want to make. When you're trading market cycles, it's always best to average in. And not only with market cycles, but with just any sort of trading that you're trying to take, always try to average in. Because me personally, I'm a mid to long-term investor beforehand. I've told you guys that before. And the reason for this is because I play these market cycles very, very prevalently, because I see them all the time. I love to trade these market cycles because a lot of the times, if you can find a very symmetrical market cycle pattern, then you're going to be able to accumulate throughout this dip, and then when it goes up, they just blow all of these little previous cycles out of the water. Like, look what happened to Bitcoin. Keep in mind, Bitcoin was one of the most bullish markets we've ever seen, if not the most bullish market in history. So not all coins are going to behave the exact same ways, but this is kind of what you want to see. First off, you have, let's indicate a few points. You have the bottom of the last move, which will be indicated by the 1. Then you have the top of the rally where the bubble pops. Oops. And then we'll indicate that by the 2. And then you have the very last point, which is the bottom of this current cycle that we're in. And then that also starts over the 1. So the 3 and the 1 are very similar. So we might as well just go ahead and put another 1 here, because this is where the next cycle begins. And we'll change the color. Let's go with blue. And then we have the new cycle. 1, 2, 3, bottom, 1, and then we go into the next cycle. Keep in mind, I don't think that this is the top of the market. I still feel like we're going a ways up. So before I put a 2, we have to wait until we get further continuation. But technically speaking, this was the top of a 2. This is the same exact chart that played out previously. It's a little bit different as far as the symmetry goes, but this is still just the conventional market cycle. You have complacency here, fear, panic, capitulation, and that's when everybody sells. It gets too scary for them. The market's just caving in everywhere around them, losses all across the board. And then that's why we see this bounce. And then anger. Who shorted the market again? Why is it going lower? And then depression. And depression is when everybody's exited the market. They're sad about their losses. They're not even messing with crypto. They'd rather puke themselves than look at a chart. And then that's when you start to see the lower highs come in. We had this little nice rounded accumulation, and then we have a bounce. And now we're starting to see around, like if we come in here, let's draw this real quick. If we come in here, you can see the round happening right before our eyes. And this is what always happens at the very bottom of the cycle. Once everybody capitulates, look at the degree of trend. It changes. It gets steep to less steep, about a 75%, 50%, 25%, and then boom, we're rounding on the opposite end of a bullish move. Now, if this continues to go up, then that would prove my point that this is a bullish market cycle. But until we see that point, we can't really for sure definitively say that because we haven't got really the same amount of volume. Now, there's a couple reasons for this. I'm not going to get into that. I'm really just trying to help you guys see the overall picture of the market cycle. So one last example before we wrap things up. Let's actually go through and analyze the cycle and put the emotions to it. Now, we'll pull up the great Ethereum here, and we'll use this current cycle to kind of see where we might be and if we are close to this bottom. So now I'm going to go here and we're going to type in the Wall Street cheat sheet. Right here. Boom, bada bing. So we're going to go through here and label these emotions. So let's find disbelief and hope. Now pull this thing up. Disbelief is when the second rally starts, so it would be right here, the first high or low. So disbelief is right here. Let me make this a little smaller so it's not so scrunched with all the rest of them. So we have disbelief, and then we have hope. Hope is when the first little pump starts happening and people start getting excited. And now what are the next emotions that we feel? Optimism and belief. This is when coins start to go parabolic. So optimism and then belief, we'll go indicate, or we'll go label that here. Optimism. And then belief would come about right here in the next move. Once the coin starts going straight up parabolic, just pure euphoria, you have nice volume coming in here, that's always the key indication that these average people are just getting in and getting over leveraged. They see this pumping coin and they're like, oh my gosh, the future, the flippening is happening right before our eyes. And then you have thrill and euphoria, and these are kind of the two peaks of the market cycle, and you can see them perfectly. It's so fun labeling these. You have thrill, about right here, and then at the top you have euphoria. That's a tricky one to type. Euphoria at the very top, and then what happens? The bubble pops. New paradigm is what you could call it. We'll label it here. We'll change the color. We'll go gold. Why not? New paradigm, and then we start the bearish side of things. A complacency and then anxiety, and you're gonna see this play out perfectly. Look at this look at the complacency. It's exactly the same. I'll zoom in here. It's exactly the same as this graph right here. Boom, boom. Lower high, lower high. Complacency, complacency, and then you got the next one, anxiety. And then panic is the next one. And then we have capitulation, lastly. Panic is about here when we've broke support once more and we're kind of just getting ready to free fall right here. And then capitulation, boom. Now, these key emotions that you feel on the downside right here, they're gonna come after the initial to top and then retrace. Most people are gonna capitulate because, guys, this is like from all-time highs of about 1450, it's like 75%. No sane person that bought the top is going to hold through this because they're getting wrecked too much. And then that's why we see the strong bounce on the upside, as indicated here. It's a little bit different on this graph. Crypto's a little bit more volatile, so these swings will be a little bit more severe. But then you make the first bounce, so we're about like here in this next bounce, and then anger for the next move down. So really we're about here at anger, in my opinion. We could see another lower low. Now, the thing is about these graphs is they kind of come at different times. Anger could be right here, which might be a more accurate way to chart this, and we could easily be seeing more of a depression where we have one more final low, one more sell-off. In fact, that's what I would actually call this. I would say the anger's right here. Keep in mind, we didn't really bounce again like the other cycle, but it doesn't matter. No cycle is going to behave exactly the same. That's just not something that happens. You just kind of have to spot the primary similarities that happen between the two. So as of right now, I think it's safe to say that we were at depression. And this is where everybody's exited the market. All the noobs are so depressed over their losses that they had to take, and they are just screwed, not looking forward to what's coming ahead, even though what's coming ahead is great buying opportunities. Whoever's not buying this market is really going to miss out because Ethereum's worth $226. What? Remember, this stuff was worth like $14.50 at the high. And you're trying to say that it'll never go back up to that high? Guys, that is just stupid thinking. That's how you get wrecked in the market. Let's see here, 225. That's like 500% to the top. And who knows how high it's going to move on after this. But guys, this is what I wanted to point out. These are the basic human emotions that happen inside the graph. It's so fun to apply these. What I recommend for you guys to do after watching this video, pull up the Wall Street cheat sheet, the great tongue twister of our time, and then go through, look at different coins, look at their cycles, and apply this to them. Write down all of the little emotions and see if you can kind of pinpoint where we're at. Once you kind of apply the cycle or the emotions to the cycle, it becomes really easy and it helps you wade through all of the gray area that you might feel. Because if you don't know exactly what's happening, it's easy to get wrapped up in these emotions of the cycle. But if you go through here and label them and get used to the similarities of the emotional cycle, you're going to be much better overall. So thank you guys so much for watching. If you enjoyed this video, always remember to leave a like, comment, and subscribe to my channel for more updates in the future. I'll catch you guys in the next one. Peace out.